a head and shoulders at support. A head and shoulders at support, you're looking for the reversal on the upside. Price support. Usually a turn happens from price resistance or price support, not from moving averages. But if you want to go on that, that's fine if that makes you happy. But combine it with a turn. So like right here, look at that. That doesn't mean a hill of beans, but you got the break and the follow through. Break and follow through. That's your turn. Break and follow through. This one's a little rough because you're under everything, but it worked. So that's how we do it. Now, how about the ES ultra short term? Ultra short term, we don't use anything but an ATR trailing stop at a 20. So how about on a 2-minute chart? Does this show me anything? Well, no. It shows me you're in a downtrend. You look for the turn to the downside. Now, you might say, well, how about here? Didn't it break up? Always go one time frame farther out. So go to either a 5 or a 15. So when you see a 15, you're going to see the markets don't look so hot. In fact, you got an indecision with a follow through. So I'm just telling you that I like to go multiple time frames. So let me show you the time frames I use. So let's go into this. Just day trading. So you can find turns. So number one, I have no idea why everybody keeps trying to buy NVIDIA on the way down. So I know everybody's trying to justify their position by looking at moving averages. Wait for the turn. Now, when you have this much damage on a daily chart, I would look for an hourly turn. So I would look at 122.5. At least that way it's higher than these. So that way you're buying on the way up, not on the way down. How many have bought on the way down? Look at that. This candle was indecision with a follow through. That's when you short the stock, not buy it. So and it doesn't have to be NVIDIA. There are a lot of other stocks I posted on StockTwits that were short ideas. So just keep that in mind. But this is what I use. I use 4 charts. I use an hourly, a 15, a 5, and a 1. That's what I use. So I use this to time my entries. Now, there's no way in heck I'd buy Apple when it's overbought. I'm using that MACD. So let me share this grid. I can do this in the essentials room. You know, I've shared this before, and believe it or not, it works now. It worked 40 years ago. Still works. Like I said, how have I stayed in business this time? I've stayed in business because I tried to sell on the way down. So I don't know what you mean about why did I sell it. I sell when I see it's not a reversal candle, it's a follow-through candle. So there are more people that try to get too obsessed with candlesticks. I look for the follow-through candle. Follow through in a downtrend. Right here, right there. Indecision, follow through. But number one is still chart patterns. Don't get me wrong. But I'm combining this with showing you turns. So right there's a 4 grid. And why did I sell NVIDIA? Well, I don't know. If you're talking about NVIDIA, that sure as heck looks like a reversal candle to me. You could put this on a daily and an hourly. There. Reversal candle, reversal candle. Reversal candle. Break of the ATR trailing stop. This is a short signal, not a buy signal. So keep that in mind. All right, so getting back to the ES even now. What is the ES telling you ultra short term? Well, you might say this is a bull flag right here, but it's a bull flag under resist in a downtrend and overbought. Then when you go to a 5-minute, look at that. And like I said, Apple did have, all we did was take a profit in Apple. We took a huge profit, over 30%, 40%, because the whole market looked like dirt. So Apple was not a downside. I'm saying we were long it, not short it. That's what I'm telling you. So we were long Apple. So we took a profit because it got overbought and the whole market looks like dirt. So when you're doing a butterfly before earnings, if you could take 30 or 40% money management, you take your profit. And that's what we did. So in here, what do you notice now? Well, you're overbought. You had an indecision candle with a follow through, and now you have a bear flag. If that doesn't hold, then you're talking about 6,000. So that's what we're looking at right here. So you see the indecision and the follow through. And then when you go to a shorter time frame, you see the 5-minute. So we could put 15 back here. We could put hourly. I don't know about you, but yeah, if this broke up here, sure, you could try to get bullish, I guess. But what made markets go down? This whole news about deep six. So you got to combine things. That's what I'm here for in the Chart Patterns Mastery Room. So what made the markets go down? The chips. Have the chips bounce? No. So to me, they bounced a teeny bit. I wouldn't say that's a lot. So, in there. And like I said, Apple, no downside follow through. That's why we stayed long. Look great. But we got out right here. I know it's here, but we took a profit on a butterfly prior to earnings. So that's it. We saw the bull flag. We stayed in until here. So, and another reason is a bull flag has a projection. 6 points. 6 points from here. It's an approximation, but close enough. And we got out in here. So we took our 30 or 40%. Better than where it was last night, where we would have lost about 20%. So we're thrilled we got out. So, and that's where we are right now. So the other thing you might ask, well, how do you find these? Well, number one, we have a proprietary scan. I like to spit out the results during the day. And you're going to see there are a number of things like, do you take this? And I'll show you. So does that look like it's turning? No. What in there looks like it's turning? Well, it looks like it turned down. Look like it turned down. So the whole key is to follow through, up and down. Don't get me wrong. Most times markets go up in the long run. The problem is buying on the way down, you might not have enough money to stay in. That's what it comes down to. Google. Now that's a tough one. Why is that tough? Because it looked on Friday like it was breaking up. But the problem is the broad market looked lousy. So when the broad market was extended, overbought, and too far from the 20, I could not in good conscience recommend any of these, and I didn't. And that's where we are right now. I will tell you, in the broad scheme of things, if this Russell, which had the indecision with a follow-through candle, cannot reclaim this, and if the SMH can't reclaim anything, I don't know why you want to just go massively long the NASDAQ. If this reclaims things, great. So that's the next thing we do a lot. We'll look, has it gotten over anything? So if you had your significant other, or you have your hedge fund manager, or somebody that's looking at every trade you do, and you just say, I'm buying the SMH because I love AI and all that. Well, he, she, or an AI, because it can be it, is going to say, what on earth is your reason? Has it gotten over anything? Well, you could say it's almost over a 1 minute. At least your significant other might say, yeah, you could put in a tight stop. On the other hand, everything else looks awful. It's not oversold. It's not oversold, but at least you'd have one reason. I like 3 reasons to do something, though. In fact, to me, if it doesn't hold here, you're talking about there. Another 14 points. So I'm not saying that's going to happen because you got the Fed, you got earnings, but I'm just telling you, I don't have 3 reasons to buy it. So just, keep that in mind. Just don't have 3 reasons to buy it. So how else do I scan for them? Well, the first thing to do is you can just go to a main list. Let's say you want to take the Dow, the transports, anything you want. And usually what I'll do is I'll take a daily chart and an hourly. So this is a different grid. This is just a 3 grid. And all I'll do on here is I'll look at all my stocks and I'll look to see if any have a follow through. This has nothing. That's just slop, breakdown. And I'll go through them. And every day the reasons change. Number 1, I don't use an RSI. Number 2, I don't use an ATR. I use an ATR trailing stop. But every day they change. I just can't stress that enough. That is 45 years of experience. Maybe it's that all the chips are going down, so the other ones are going to go down. It can be companion stocks. It could be the bonds. It can be geopolitical. So it can be, I very rarely use the 20. I'll use the 20 on the way up for a stock, but I use these. This is it. So a 20, a 50, and the ATR trailing stop and the MACD. That's it. That's all I use. And like I said, the reasons can change every day. So if I see that, it just every day they change. So if I see, let's say, GNRC, and I see it reclaim something, but the whole market looks like it's cracking, then I'm not going to trust that it gets over the 20. You got to look at the broad market first, overall market criteria. And if the whole market looks bad, I'm not going to chase something to the upside. And I'm certainly not going to buy it on the way down. So every day the conditions change. That's why chart patterns mastery is so valuable, in my opinion. So in there. Now, Lennar. I called that for one of my friends before the opening because I had no idea why it was down. On the one hand, you could say, oh, maybe the economy is going to be weak, tariffs and all that, and that's why Caterpillar's down. So on the other hand, you might say interest rates seem to have peaked. That's good for Lennar. So how would you have played a Lennar? Well, there you go. So number 1, you have the bond market up. That helps housing stocks. So, that's number 1. Number 2, you had a reason, and then you had a trigger on a 1 minute. You got over the ATR trailing stop. Nothing to do with moving averages. Got over it. So at least you had 2 reasons. And about the third would be the rest of the group was going bonkers before Lennar did. That sure looks like a bull flag. So like I said, every day they change. But here you go. Interest rates and the companion stocks. That was the key. And now, I'm just telling you, like Apple is tough because it's sort of its own entity. So that goes a lot on chart patterns. But do you play like NVIDIA? I'm just telling you, the whole market, if the Russell can't lead, and if the SMH can't lead, and the SMH is what made it go down, then I don't know what makes you think it's going to have a huge rally. That sure looks like a bear flag to me. So are there 3 reasons to buy? Absolutely not. Now, if this got over this and you saw the SMH start to do that, that's different. But right now, it's not showing you anything. Is it near massive price support on the right? No, not really. Is the SMH near, because that the chips are what took everything down? Is that having a massive rally? No. So you don't have 3 reasons to buy, is my point. You just don't have 3 reasons to buy. And everybody wants to buy. I mean, just buy. I mean, I'm just telling you, in the long run, I understand that. But in the short run, you gotta know when not to be long. That's what I mean. In fact, I'll show you a perfect example of a turn. We were long this the last day of the year. There's your turn. You had CVX going down. This is where I made a mistake. I'll be the first one to tell you that. So you had CVX going down, 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 down. I'm going to put it just 2 time frame. Take out the 8. Put in a 20 and a 50. So what are you going to notice in here? It went down, down. Everybody wants to buy on the way down. You wait for the indecision and the follow through if you're bullish. So can you combine 3 reasons? Well, yeah, let me show you. Number 1, end of the year, a lot of these tax loss selling stocks go up. So that can be an esoteric reason. Number 2, it was at massive support. Number 3, it had a green candle with follow through candles. That's how you know it started turning. So 4, it got over the ATR trailing stop and the 20. At least it got over something. So, I mean, it got over something. So you had massive daily and weekly support, a nice reversal candle, and then a follow through to the upside. That's 3. Now, when I say I made a mistake, it's because it's really hard to buy it here when it was just here. We got out in here. So we bought it here. We got out here. Yeah, we made our 4 points. So an indecision candle, you'll have to go online, but an indecision candle is just a tiny candle like that, a doji. Indecision, not a wick. Indecision candle isn't a wick, but a wick can be a reversal candle. So a reversal candle and a follow through. It doesn't have to be an indecision. It just has to be a loss of momentum and then a follow through the other way. So it doesn't have to be an indecision. It can be like this. That's not indecision. That's just a follow through to the upside. Reversal candle. So, I mean, I could go on for 2 hours of candles, but I'll tell you, it's the big ones that matter and the tighter ones that matter. That's what it looks like to me. No, I mean, it's a great question. The biggest thing I see is a lot online try to decipher every teeny candle, and I don't. So I just go for like after it's this extended, you look for some follow through. Now you might say, how about that one? Why didn't it work? Well, it hit support. And after a big move, I like to see a defined trend line. It's very unusual to see what happened to the SPX. Usually after a massive rally, it takes some time to futz around. But like I warned, this is very similar to what happened in the inauguration rally with Reagan in 1980. Almost exactly the same. Luckily, I posted that before it happened. About the inauguration rally, the rally to test highs, and then the gap down that takes everybody by surprise, which is what happened. Usually after that, well, we're already at support. Now, keep that in mind. If you're buying, though, you better see some follow through to the upside. And that can be a 2-minute. I don't see it. See this? That doesn't look anything bullish. Usually the turn includes a sharp move, short term, that gets overbought and then does that. I'll give you a perfect example. Here's the bonds. This was posted in our charts. The bonds, a sharp move, and then it worked off the overbought by forming a bull flag. So at least you had the turn. Now, if you were just blindly buying, you might say, well, how about right here? Well, it's still in a big old downtrend. If I saw this, it's already overbought. This, I like when you see a defined pattern. So, I mean, that's how I do it. And like I said, I see nothing that looks good in the markets right now. Maybe you do. I don't. And I'd love to say, yeah, buy this, buy that. I don't know about you. This seems like short this, short that. Not Apple. But when you see these breaking down, why on earth would I buy the ES if these were the things that made it go down in the first place? So that's how I do it. Like I said, everybody has a different way to do it. This is the way I do it. So this has kept us in business a long time by not buying on the way down, because you know what? Buying on the way down and like Apple ended up working, but buying on the way down in NVIDIA and you're not happy. So the whole idea is to wait for the turn. I mean, heck, you're going to have buys on the way up in NVIDIA. It's just not now. You're going to have buys on the way up in Tesla. Like I said, I'm not a perma bear whatsoever. I just like to be able to play both sides of the market and not just blindly play one side and not the other. And as you see, this sure looks like a bear flag to me. So I'll leave that with you. So take care. Thanks for being with me, and talk to you later.